We turn now to Ann Sonders for her thoughts on the Fed and the markets. She's chief investment strategist at Charles Schwab and Company. So, Ann, it seems like there were a lot of doubts, a lot of confusion about what was in those Fed minutes, what the Fed will do next. What do you think was the message of the markets? And just what do you think in general about what's next for the markets?
I think the skittishness of the markets may be more than just confusion about the Fed minutes today. I don't know that that provided a lot of additional color. But we put a note out about 10 days ago saying we thought the market was going to pull back. Now, uncertainty about Fed tapering and the implications for that is part of the reason for that. Again, I'm not so sure that the minutes specifically were a function of today's volatility. I think we're just in a fairly skittish environment right now for the market, at least in the short term.
You know, Ann, we sort of know that the bond buying will end. What we don't know is when the end will begin. What's your guess?
Look, I mean, we have no reason to think that it's going to be other than what the consensus believes, which is at least an announcement on September 17th or 18th, which is the next meeting, and maybe an announcement as well as the beginning of a tapering. You know, the Treasury is issuing fewer Treasuries right now. So I hope when the Fed does this, that they put the tapering in the context of lower Treasury issuance. So they're really not changing the supply-demand balance. In fact, if they were to continue buying at this pace, given lower issuance, they'd be buying an even bigger portion of outstanding Treasuries. So I think they could maybe ease some concerns and really cement the idea that tapering is not tightening.
You know, you just mentioned your report that you came out with last week that was titled Pause, but you also say in that report that long-term things look good. Why are you positive on stocks?
Again, I think, you know, we're probably in a bit of a pullback mode here. I don't think it's going to be terribly sinister, but seasonals are against us right now, at least as of a week and a half ago. Sentiment was against us, some technical deterioration, and we may not be through that. But looking past some of those near-term issues, looking past other two macro issues with the implementation of Affordable Care Act, the second round of sequester cuts, valuation is still pretty reasonable. Corporate earnings are pretty decent. And I think investors are only now, 4.5 years starting to get more enthusiastic about the market. So there's really very little indication that what I believe was a secular bull market that began in March of '09 is coming to a close. That said, there are going to be times in a long-term bull market where you need to pause, you need to correct a little bit, sort of the pause it refreshes, and I think that's the environment. But I'm not swayed by the short-term worries in terms of my long-term optimism.
Are you in the camp, Ann, with so many others who think that the U.S. economy may be the one sort of place that outperforms in the short term, and that hence U.S. stocks are a better bet over the next few months than emerging markets or foreign stocks?
No question, Ty. We've had a decidedly pro-U.S. stance in our global asset allocation views right now, certainly relative to emerging markets, which we have been suggesting investors lighten up on, particularly China. So U.S. is our favorite market. Second to that outside of the U.S. would actually be European equities right now. But we are a big believer in the relative U.S. story.
Tell us real quickly, we have half a minute. You said that that your clients are feeling, investors are feeling enthusiastic. What is the mood? Where are they putting their money? I'm talking about the individual investor.
Yeah, they're feeling a little bit better, and I think, you know, the market's gains certainly support that. But I think investors are now starting to look past some of the policy uncertainty, starting to get a little bit more enthusiastic about the fundamentals. Again, in the near term, I think there's some hurdles, and I would say concern about Fed tapering is probably the #1 list of short-term concerns in an environment otherwise of improved sentiment.
All right, thanks a lot. Ann Sonders from Charles Schwab and Company.